Well, the market is being so indecisive these days, with Bitcoin barely moving like 2% today, and then tomorrow it might drop back 2%. Like you notice memes popping up on Twitter, playfully poking Bitcoin with a stake, would you please do something more than 2%? But we're still not getting much actions lately. But luckily, today we are joined by the CEO of Caleb Brown. He will shed some light about the market and provide some of his insight on to our audience. So, welcome, Jackson. How are you feeling today?
I'm fantastic. Thanks for having me on the show, Jamie. Yeah, first of all, it is strange to us. We always think it's very weird when Bitcoin's not volatile because we're so used to it being volatile. In the traditional markets, and people don't usually talk about this, but in the traditional markets, an asset becoming not volatile is a sign of it becoming is a sign of market maturation, right? So it's being more mature of an asset class. But we never hear about anyone talking about that in crypto because we generally see that it's stable for short periods of time, followed by a very volatile move. And the reason for this is because the, there's a mechanical difference between Bitcoin as an asset and a lot of other asset classes. So the first thing is that the the um, the reason for the increased volatility at the point in which the market is interested in trading it is because Bitcoin is an asset that can't be diluted, unlike equities. So in equities, if a stock is overvalued, the company has the ability to issue new shares and dilute it. Same for bonds, right? If the bonds are valued really high, people will be borrowing more, and there's essentially an increase in supply in the market. We don't have that in Bitcoin, so Bitcoin can't be diluted, which is why at the point of the market being interested in trading it, there's a lot of volatility. The second reason is that we're still missing a lot of the institutional trading mechanisms that increase the liquidity of the asset class. And you'll see that like over time, Bitcoin continues to get less volatile, but it'll still continue to be more volatile than traditional assets. And so last cycle, we didn't really, so last cycle, talking about like 2017, 2018, there wasn't a way to short Bitcoin. So there's less liquidity in the market. So it just basically, if there's a directional interest in one way or the other, it'll just go very far in that direction because there's a lack of ability to short it. Now, this cycle, or at least the 2021, 2022 period of time, we had the ability to short, but there was still, relative to other asset classes, a lack of derivatives, so a lack of options markets. There were a few popping up, but not very much liquidity in them, and basically one marketplace that everyone used. So as an asset class, we're just missing some of these institutional infrastructure to trade it and increase that liquidity. But over time, I'd say Bitcoin always reduces in volatility. We just tend to not notice it properly.
Great. So we have a love-hate relationship when it comes to volatility. We love volatility, but at the same time, if it's not volatile enough, it also means it's getting more mature, right? Well, I do want to get back to ask more questions about Caleb Brown because since this is your first time here, like why don't you tell our audience who you are, what is Caleb Brown, what do you guys do? Because it's kind of like mysterious when it comes to crypto brokerage. Not a lot of people would use a brokerage; they would just go to an exchange, right? Could you share your thoughts about that a little bit more and give us like an introduction about it?
Yeah, absolutely. So Caleb and Brown is a cryptocurrency brokerage. But put it very simply, we're just another place to trade crypto. But the only difference for us is every single customer is assigned a relationship manager who takes care of that client throughout their entire crypto journey. And the reason we decided to go about this business model was because when we started out, and then we're like I think we're our seventh year of operation. Since 2016, we've been operating. We're based out in Melbourne, Australia, but we looked at the space, and I was really interested in onboarding people into crypto. And at the time, there were already a lot of crypto exchanges, and there still are today, right? But I felt like, if we're building another crypto exchange, then we're kind of competing for the same market against a lot of our peers, right? We're still helping people onboard into the crypto, but I just felt like there was a lacking service where people were giving clients a white glove service, a fully dedicated customer experience where we can actually onboard people that maybe otherwise wouldn't get into crypto. And where that naturally leads is we ended up with a client base that's a little bit more towards the higher portfolio size, where they require a bit more attention. Maybe they're treating it as a more significant investment than the smaller speculative traders.
Great. Can you share like what's the general sentiment among your retail clients right now? Are they showing more interest, especially after BlackRock filing for the ETF? Are they like getting more bullish, or are they still hesitant about buying crypto right now?
Yeah, well, okay. The way we feel about the market right now is we're not. I don't think sidelined is the right word. I think it's more about positioning the market in a defensive manner, or positioning the portfolio in a defensive manner. So the way our clients feel and the way we feel as well, and we publish our research on a biannual basis on our website. The We have seen the pain from the correction, and we're waiting for the next catalyst up. And crypto, and you can't argue this, crypto is a risk asset. So the point in which we're going to get movement in our market is when the appetite for risk assets return. And that's not really the case yet for the macroeconomy either. So that's the first thing. There's basically two ways for the market to return. One is that there's risk asset appetite, and the second is that we have some native crypto innovation that takes place, which maybe a new use case in crypto that everyone gets very excited about. However, we haven't quite seen that yet, right? So, and we think we're missing a lot of the user experience upgrades to get us there. So I'd say the way our clients are feeling about it is we are patiently waiting. We're in a defensive position. We think most of the pain is past us for the really strong assets. For the weaker assets, we're not super excited about.
Well, I guess that leads me to the next question. Like, what has it been like to run a retail-focused crypto business during a bear market compared to the bull market? Like, your actions for your clients, is it like very different?
Yeah. Well, I don't think this will be any surprise to anyone. But there's absolutely a difference running a business in a bear market and running a business in the bull market. There's actually pros and cons to both. So, we see the vast majority of people get onboarded into crypto during a bull market. And the unfortunate case is that you get onboarded when everyone's excited about it, which also inherently means the prices are high. And then in a bear market, basically nobody's interested in it. But the benefit there is that you're not dealing with overvalued prices. So that's the market difference. In terms of the difference for the customer, there's a tremendous benefit of getting in the bear market, which is that not only are prices less likely to be overvalued, you're also going to, at Caleb and Brown at least, going to have a little bit more of your relationship manager's time, because the unfortunate thing is that our business is because it's heavily focused around relationship management in a bull market, it's very difficult to scale. So in 2021, we had quite a lot of clients trying to sign on to our service that sat through a waiting list to get onboarded. And basically, people had to wait like 2 weeks. At the worst period of time, it was 4 weeks to get onboarded. We were not super proud of that. But these days, because there's less activity, you have a lot more of your relationship manager's time. You can speak to them, understand the market, get your relationship manager to understand where you are with your crypto education, with your technicality, where you are with your self custody setup. You get a lot more of your relationship manager's time. And by the way, all of it's free. You can always pick up the phone, speak to a relationship manager, email them. We're here to support our clients. But the service is better in a bear market.
Well, I'm enjoying this bear market because Bitcoin at 30K, who doesn't want that, right? Well, even though, like, saying that, we have been in a bear market for almost 2 years now. So I would like to get your thoughts on, like, what do you think will trigger the next bull run in crypto, and when do you think it might begin?
Yeah. So in relation to timing, I guess we'll go back to my previous response, which is it's not like a month based or year based timing. It's more of a economic based timing. I think it's going to come around the time where risk assets perform. So when maybe when you start to see equities perform, or when you start to see central banks feel like they've got a handle on inflation. Maybe those are the indicators we're looking for. However, there is the chance that native crypto innovation takes us ahead of that, and we become the first mover to elicit interest in risk assets again. In relation to what are the pockets of innovation that we're looking for, I think it's very, very important now that crypto and Web3 and DeFi and NFTs and gaming, everyone focuses on user experience, because I think back to like when I first joined crypto, it was in 2013, and everyone was always advocating the user experience advantages of Bitcoin. They were saying, hey, compared to the international wire, you can send Bitcoin overseas in 10 minutes, compared to I think back then it was like 3 business days. And domestically in 10 minutes instead of back then, even domestically, was 1 business day. These days, bank payments are pretty much instant in most countries domestically. International, you still get that speed benefit, but it's instantaneous rather than 10 minutes, right? So we've actually gone from having the user experience advantage to losing that user experience advantage in the very niche use case of payments, right? But the beautiful thing about crypto is that payments is not the only use case. So we still have a lot of innovations. We have decentralized finance, we have liquidity pools, we have lending and borrowing. All of these things are actually, on the actual transaction side, they have better user experience than in traditional finance. But I think a lot of the custody related, onboarding related, apps on your phone, basic user experience features are missing. So the things that will enable it that we're excited about are like zero knowledge EVMs, zero knowledge rollups, and just general scaling, right? So optimistic rollups on the Ethereum virtual machine chains are all things that we're very excited about. And I think there's also going to be integration between the traditional commerce system and crypto. And when I say the traditional commerce system, I don't mean traditional finance. I mean commerce in the sense of like you buy stuff online, you pay with a Visa card or MasterCard. I think the card providers are looking very carefully at the crypto space in the payments category. I think PayPal might have just announced that they're looking at doing some kind of stablecoin activity. So all of these things lean towards integration with crypto and commerce. And at the point in which crypto is natively integrated with commerce, if it has a better user experience, it'll just naturally overtake traditional finance because it's the user experience is just better.
Well, you mentioned a little bit about the external factors, and I kind of want to go back into talking about like major exchanges. Like, what are your thoughts on the increasing regulatory pressures on exchanges like Binance? Because they are facing scrutiny from all sides. What do you think, like, Binance gonna do? Any hot takes on this? It'll be great.
Okay, so um, the regulatory issue is a very tricky matter, and a lot of the times, I think we in crypto like to just blame the regulator and point out all the flaws. But I think a more constructive approach is to talk about things that we've seen work really well and things that have not worked really well. So to kind of like set a fair starting ground, I think most people can agree that it's not ideal what happened last year. Like we had massive fraud take place in the centralized crypto space. Now that should have been the domain of the financial services regulators, but they had been too slow to regulate the space. And it seems like what they're doing now is playing catch up and going, "Whoops, we let something slip through. Let's rush to clamp everything down," and they're kind of going too hard, right? Or we kind of intuitively feel that they're going too hard at it. So I think most people will agree that that's kind of the sentiment right now. And without speaking to specific exchanges, I think we should focus on what we want the regulators to do. And we've seen a lot of different approaches, right? Like in the US is actually an extremely different approach from what's happening in Hong Kong, for example, where you are. In the US, they're going regulation by enforcement, it doesn't seem to help anyone. In Hong Kong, we're seeing excitement about attracting innovators and business and commerce to their city. So I believe the Hong Kong Monetary Authority was actually asking banks to have a clear process to support crypto companies as clients. That's the opposite of basically most other countries. So these are things we want to see from the regulators. So I'm fortunate enough to be on the board of Blockchain Australia, and it's an industry body that works with businesses in the space as well as regulators to get working models for policies to get adopted. And one of the most successful things we've done in crypto in Australia was the adoption of the AML framework for what we call digital currency exchanges, but they're crypto exchanges in Australia. That took place in 2018 and was launched in April. But the way that took place, I believe, was fantastic and we should try to replicate it across the world. And what the regulator did, the regulator is called AUSTRAC, that is in charge of anti-money laundering rules in the country. They went to an industry body and they said, let's consult the companies in the space on how we can introduce a framework and then how we can guide these companies into adopting that framework with the full understanding that they are currently not being regulated. So instead of coming in and saying, all of you are unregistered remitters or all of you are unregistered markets, they're saying, okay, we understand that you're a new product category. We understand that there are new operational hurdles that you might have to overcome in order to come into compliance. Let's have a consultation. We'll have a roundtable. We'll discuss what those are. We'll build a framework and we'll push it out to the industry. So they launched it in 2018, and then every single year they go through industry bodies that then invite companies into a roundtable where the companies are able to ask the regulator for feedback. So once a year, the regulators actually meet with all the companies in the space and say, how are your anti-money laundering rules working? What's working? What's not working? Here are some themes that we're seeing that might help you guys improve. So it's a very collaborative process, and it's an ongoing annual process. It's not a case of, hey, the rules are clear, good luck with your application, and that's it.
Well, I do feel like places in Australia or Asia, because a lot of Asian countries are just like Hong Kong, Japan, Korea, Vietnam, Thailand. They are getting a lot more crypto friendly than they used to be. On the other hand, US is, I'm not sure what they're doing, like going back and forth. But I do want to go back to the question about exchanges. So how do you envision them evolving over the next 5 years? If you go to the rank list that we're seeing, the biggest one is Binance. So in the
Yeah.
next 5 years, do you think this list is still going to be the same?
No, I don't think it's going to be the same. So um, I think Binance has something like close to 90% of the market. And if I'm wrong, it'll be between 70 to 90%, right? So let's call it 80% of the market. They have a tremendous market share, and basically every regulator in the developed financial economies are trying to pull it into their regime. So they're basically going to be fighting headwinds. And the only way for a regulator to pull the market into their regime is to have that market share diverted or supported in a country in their jurisdiction. So the future is either going to be more distributed, and I'll use the word distributed instead of decentralized, but it'll be distributed across more countries, or it will be one where Binance is fragmented into Binance per country, right? Binance US, Binance Australia, Binance, etc. Um, so, it's not guaranteeing that Binance is not the most dominant player 5 years out from now. But if they are, I think they would be in a much more federated model than what they currently are. I think they very much operate as a single global player, despite the fact that they have different entities. I think the systems are pretty vertically integrated, and I believe regulators will try and break it up.
All right. So looking more broadly, what do you believe the future holds for retail crypto investing then?
So yeah, that's a great question because we've just talked about what will happen to the exchanges, and I think the pressure that centralized entities are receiving now from the regulators are inherently going to absorb some of the resources that were focused on innovation into focusing on compliance, reliability, fraud prevention, scam prevention, just about maturity, right? And that's true for Caleb and Brown and our business as well. Where we were previously solely focused on innovating, building new things, I think the regulator now expects every single exchange to focus on making things stable, reliable, work for extended periods of time, trustworthy. And what that'll do is push a lot of the innovation onto the on-chain world. And so I see a future where the exchanges are serving funds under administration, and the on-chain world serve investment controlled by the owners themselves, or as you describe, the crypto world for retail is one where they're mostly on-chain, and exchanges are servicing the funds in pension funds, superannuation funds in Australia. That's what we call them, as well as anything that's under the purview of a portfolio manager, so under a fund manager, where they're taking investor capital.
Great. So the last question I've got for you, what are you most excited about in the crypto space for the next 1 to 2 years? Because previously, like let's say back in 2021, we have seen an NFT boom. Back in 2020, we have seen a DeFi boom. Do you think these trends going to come back? Like an NFT going to make a massive comeback, or do you think we're going to see a completely new, unpredictable trend?
Um, this is a good question. So I think the I think what will catalyze the space. This is now just pure speculation, but what will catalyze the space
Yeah,
will be something new. But I think the existing trends will have a resurgence. Just like when we had an NFT boom, it doesn't mean there's nothing happening in DeFi. It doesn't mean there's nothing happening in smart contracts, right? So I think the sequence of innovation was like we had Bitcoin, then we kind of had altcoins, and they altcoins and I'm talking pretty far back. So we had Bitcoin in 2008 and 9, and then we started getting some altcoins around the 2013 era, and those altcoins were just like transactional innovations on Bitcoin. They were usually about making it faster. That didn't seem to stick around. Then we had smart contract platforms in the Ethereum era, and that's been fantastic, and that worked really well. And then we had DeFi. But even in the DeFi summer, we still had layer ones emerging, right? Or alternative layer ones emerging, where we get Solana and Binance Smart Chain and everyone else trying to compete for that market share. So I think there will be something new because there's always something new. Crypto is about innovating. It's about everyone having the permissionlessly building their startup. So there will definitely be something new, but at the same time, I think the use cases that have proven themselves will also see a resurgence. And specifically, that will be in sound money in the form of Bitcoin, a smart contract platform, or a network that holistically the whole industry shares in the form of Ethereum or any layer twos or EVMs, and DeFi. So I think DeFi has proven itself to have some kind of Lindy effect where, amidst all the centralized exchange liquidations, it has, or insolvencies, it has managed to perform the liquidations at the right prices and be a resilient protocol. So I think DeFi will see a resurgence. In my eyes, I like NFTs. They're fun, but I think they have yet to prove themselves to be resilient. But we'll definitely see with time.
well, I personally hope NFTs are gonna make a comeback because I'm still holding some NFTs from the 2021 boom. Well, because when it just came out, I thought it would be fun, pay thousands of dollars for a JPEG. Why not, right? But unfortunately, that's all we got time for. So if you guys want to learn more about Jackson's perspective and also what Caleb and Brown is doing, so Jackson, what are the best ways our community can reach out to you?
Yeah, so our website is calebandbrown.com, and my Twitter is im_Jackson Zeng. Thanks for having me on the show, Jamie.